Hi, in this video, we will have a look at the specimen format of all ledger accounts that have to be prepared at the time of dissolution of partnership firm. We will have a look at the format of the realization account, partners loan account, partners capital accounts, and also bank account. We'll begin with realization account. The first entry, we will transfer the assets to the debit side of realization account. The assets include the transfer of individual assets against which there is no provision. Examples could be land, building, furniture, stock, bills receivable, etc. Transfer of individual intangible assets such as goodwill, patents, and also transfer of individual assets against which there is a provision or reserve. Examples: sundry debtors, investment, plant and machinery account. On the credit side, we need to transfer the provisions or reserves against which there is an asset. It could be provision for doubtful debts, which is a provision created for sundry debtors. It could be investment fluctuation reserve, which is a reserve created for the purpose of investments, or a provision for depreciation on plant and machinery created for the purpose of depreciation of plant and machinery. So these provisions and reserves have to be transferred to the credit side of the realization account. Next, we need to transfer all external liabilities or third-party liabilities. Examples are sundry creditors, bills payable, outstanding expenses, bank loan, and loan borrowed from partner's spouse, relative, etc. So once the assets and the external liabilities have been transferred to realization account, we need to pass the entries for taking over assets by partner as well as realization of assets in cash. For realization of assets in cash, we need to write by bank account, and where the assets are taken over by the partner, we need to write by partner's capital account. The details of realization of each individual asset as well as the value at which the partner takes over each individual asset is to be specified in the inner column. For liabilities paid off, we will write to bank account, and where any liability is taken over by partner, we will write to partner's capital account. The value at which the liability has been taken over by the partner as well as the amount which is paid for each individual liability needs to be specified in the inner column. The next we'll have to deal with is realization expenses. We need to write to bank account, where the expense was to be borne by the firm and it's also paid by the firm, and to partner's capital account, where any remuneration is given by the firm to the partner, or also in case any expense was to be borne by the firm but has been paid by the partner. After this, we need to transfer the gain or loss on realization to the partner's capital accounts and profit sharing ratio, where the credit side is greater than the debit side total, it implies a gain on realization, and we will write to gain on realization and transfer it to the partner's capital accounts in profit sharing ratio. On the other hand, where the debit side total is greater than the credit side total, it implies a loss on realization, and this also will be transferred to the partner's capital accounts in profit sharing ratio. So these are the entries which have to be posted in the realization account, and this is the format of realization account. Next, let's learn the format of partner's loan account. The loan account having a credit balance and appearing in the liability side of the balance sheet. We'll bring down the balance of the loan onto the credit side because it has a credit balance. This amount has to be paid off by the firm, and for that we will pass the entry to bank account. Please remember, this format is based on the assumption that there is no debit balance in the same partner's capital account, because in that case we will set off the partner's loan account with the debit balance of the partner's capital account by writing on the debit side to that partner's capital account. So assuming that there is no debit balance in the partner's capital account, the firm will pay off the partner's loan, and we will have to pass the entry as to bank account in the debit side. So this is a format of partner's loan account. Next, let's learn the format of partners' capital accounts. Where the partner's capital account has a credit balance appearing in the liability side of the balance sheet, we will bring down the balance as by balance brought down. And where a partner has a debit balance of capital, that is a capital balance appearing in the asset side of the balance sheet, we will bring down the balance as to balance brought down. Any partner's current account appearing in the liability side of the balance sheet will be transferred to partner's capital accounts as by partner's current account, and any partner's current account appearing in the asset side of the balance sheet and having a debit balance will be transferred to the partner's capital account as to partner's current account. The general reserve and the accumulated profits will be distributed among the partners in profit sharing ratio as by general reserve or by profit and loss account. Any accumulated losses or advertisement suspense will be written off among the partners in their profit sharing ratio as to profit and loss account or to advertisement suspense account. For liability taken over by the partner, we will write by realization account, and where any asset is taken over by the partner, the entry will be to realization account. In case of realization expenses which have to be borne by the firm but is paid by the partner, we will write by realization account. We will also write by realization account in case of any remuneration which is payable by the firm to the partner. Where the expense of dissolution is to be borne by the partner but it's paid by the firm, we will write as to bank account on the debit side of the partner's capital accounts. We'll transfer the gain on realization as by realization account and loss on realization as to realization account. The partner's loan appearing in the asset side of the balance sheet will always be transferred to the debit of the partner's capital account as to partner's loan account. Now this by partner's loan account over here, I've shown this just to help us understand that where there is a partner's loan appearing in the liability side of the balance sheet and a debit balance, that is the debit total is greater than the credit total, we will set off the partner's loan with the debit balance of partner's capital account and write by partner's loan account over here. The final settlement, where the partner has to bring in cash to make up for the deficiency, it would be by cash or bank for the balancing figure. And where the firm has to pay cash to the partner in the form of final settlement, the balancing figure will come as to cash or bank account. So this is the format of the partner's capital accounts. Finally, let's learn the format of bank account. The balance of bank will be brought down on the debit side as to balance brought down. In case there's a cash balance appearing in the asset side of the balance sheet along with the cash at bank balance, we will transfer the cash to the bank and write to cash account in the debit side. For assets realized, we will write to realization account. For liabilities paid off, we will write by realization account. For any realization expenses which is to be borne by the firm and also paid by the firm, we will write by realization account. And for any realization expense that has to be borne by the partner but is paid by the firm, we will write by partner's capital account. The partner's loan appearing in the liability side of the balance sheet will be paid off by the firm and we will write by partner's loan account. The final settlement, where the firm pays cash to the partner, will come as by partner's capital account. And in case the partner has to bring in cash to make up for the deficiency, we will write to partner's capital account. At the end of passing all these entries, if the total of our bank account tallies, then we will know that the arithmetic is correct in solving the problem. So in this video, we learned the format of all the 4 ledger accounts that needs to be prepared at the time of dissolution of partnership firm.